Most people spend their lives chasing a bigger paycheck and dutifully putting money in a savings account. But what if I told you the truly wealthy are playing a completely different game? While you're focused on earning, they're focused on owning. They are quietly buying up a whole class of assets the average person barely knows exists. This is the single biggest difference between living paycheck to paycheck and building real, generational wealth. Today, we're pulling back the curtain on the 7 assets the rich are buying that you're probably not. For generations, the playbook seemed simple: go to school, get a good job, save money, and retire happy. But that story is falling apart. A salary, no matter how big, is just one point of failure. It's active income. If you stop working, the money stops coming, and savings accounts, they're even worse. With inflation constantly eating away at your cash, your savings are losing purchasing power every single day. This is the trap most people are stuck in. They're working harder and harder but feel like they're on a treadmill. That's because their financial strategy is defensive. They are trying to save their way to wealth. The rich, on the other hand, are focused on owning their way to wealth. The difference isn't about how much you earn, it's about making your money work for you. Here's the secret: the wealthy don't just work for their money, they turn their money into an army of employees. They convert the income they earn from their jobs into a portfolio of assets that make money for them 24/7, whether they're working, sleeping, or on vacation. They're not just players in the economy, they're owners of it. So let's get into exactly what they own. Asset 1, businesses you don't have to run. The first, and maybe the easiest place to start, is owning pieces of great businesses. Yes, I'm talking about stocks, but forget everything you see about people gambling on quick trades. The rich don't see the stock market as a casino. They see it as a way to become a part owner in the world's best companies without doing any of the day-to-day work. When you buy a share, you own a sliver of that company's profits, growth, and future. The wealthy focus on so-called blue-chip stocks, massive, established companies that have a track record of surviving recessions and paying out dividends. They aren't chasing the hot new meme stock. They're buying businesses with real, lasting value. And for those who don't want to bet on single companies, they use low-cost index funds and ETFs. This lets them buy the entire market, diversifying their risk and capturing the growth of the whole economy. It's the foundation of their wealth because they literally own a piece of the engine that drives capitalism. Asset 2, cash-flowing real estate. You knew this was coming. Real estate is one of the oldest wealth-building pillars, but again, the rich play this game differently. It's not just about buying a home and praying it goes up in value. It's about buying properties that put cash in your pocket every single month. This could be apartment buildings, commercial spaces, or even rental homes. The goal is simple: the rent check must cover the mortgage, taxes, insurance, and all other costs, with money left over for you. That leftover bit is passive income, a reliable paycheck that tends to keep up with inflation. Some analysts see signs of a rebound and rebalance in the 2026 housing market, with modest growth expected. But here's the real power move: they use other people's money. They get a loan from the bank for the bulk of the purchase, and then the tenants pay that loan off for them. Meanwhile, the property value hopefully appreciates over time. On top of all that, governments give huge tax deductions for things like mortgage interest and property taxes, which can slash their overall tax bill. Asset 3, the invisible market, private equity and venture capital. While most of us are watching the public stock market, the ultra-wealthy are playing in the VIP room, private markets. This is the world of private equity and venture capital, where a significant portion of their money goes. Think of it like this: the stock market lets you buy a piece of Apple or Google today. Venture capital would have let you buy a piece of them when they were still in a garage. Private equity is about buying into established private companies to help them get to the next level. Sure, these investments are riskier, and your money is often tied up for years, but the potential returns can blow the public markets out of the water. It's how the wealthy get a piece of world-changing companies before anyone else, capturing that explosive early growth. They understand that the biggest rewards often hide where most people can't look. And hey, if you're finding this valuable, do me a quick favor and hit that subscribe button. We break down these kinds of wealth strategies every single week. Now, it's really important to get this next part. The rich don't just own one of these. They combine them into a financial suit of armor. They know that a single crisis rarely hits every asset the same way. When the stock market is down, their rental income is still flowing. When public markets are shaky, their private equity deals might be hitting their growth stride. It's not about finding one magic bullet, it's about building a diversified fortress. Asset 4, intellectual property. This is one of the most underrated assets of our time, but it's a pure game changer. Intellectual property, or IP, is the ultimate way to get paid for your brain instead of your time. It's about creating something once and selling it over and over again. The value and amount of IP assets are expected to continue growing. This could be writing a book, creating an online course, building an app, or patenting an invention. Once the work is done, that asset can generate income for years with very little extra effort. The increasing importance of intangible assets is a key driver for specialized financing in this area. The rich know their mind is their greatest asset. They invest in their own knowledge and then figure out how to scale it. Think about it. A consultant can only help one client at a time. But a consultant who creates an online course can sell their knowledge to thousands of people at once. That's the incredible power of IP. Asset 5, hard assets and collectibles. When the economy gets shaky and people get nervous about paper money, the wealthy lean on assets that have held value for centuries, hard assets. This includes precious metals like gold and silver, which are widely seen as a shield against inflation and currency chaos because governments can't just print more of them. After a record-breaking 2025, many analysts remain bullish on precious metals for 2026, citing factors like central bank demand. But it's not just about shiny metals. The super-rich also invest in their passions, like fine art, classic cars, luxury watches, and rare wine. These might look like toys, but they are a serious asset class projected to see continued growth. A rare painting or a vintage Ferrari can appreciate in value in ways that have nothing to do with the stock market. It's another layer of protection that they can also happen to enjoy. Asset 6, debt as a tool, not a trap. Most of us are taught to fear debt, and for good reason. Credit card debt, car loans, that's bad debt, and it's a trap that destroys wealth. But the rich know there's another kind of debt, and they use it to their advantage. Good debt is money you borrow to buy an asset that goes up in value or produces income, like that rental property we talked about, where the asset pays for the debt. Another pro move is borrowing against a stock portfolio at a super low interest rate. This gives them cash for new investments without having to sell their stocks and get hit with a massive tax bill. It's a key part of the buy, borrow, die strategy, where assets are passed on to heirs with major tax advantages. For the wealthy, debt isn't a sign of being broke. It's a financial tool like a hammer. In the wrong hands, it'll smash your thumb. In the right hands, it builds a mansion. Asset 7, tax and legal fortresses. Finally, we come to the most important asset, and it's one you can't even see. It's the legal structure they build around their other assets. Because let's be honest, it doesn't matter how much money you make if you lose half of it to taxes or lawsuits. The wealthy use a whole toolbox to protect their wealth. This starts with the basics, like maxing out tax-friendly retirement accounts, but they go way beyond that, using legal structures like trusts and family-limited partnerships. A trust can shield assets from creditors, make sure wealth is passed down smoothly, and slash or even eliminate estate taxes. They use strategies like tax loss harvesting, selling losing investments to cancel out the gains from their winners. This isn't about shady tax evasion. It's about legally and strategically using the rules that are already in the tax code to keep more of their money working for them. So that's the playbook, the 7 assets the rich are buying. But as you can see, the real secret isn't just the assets themselves, it's the mindset. It's the shift from being a consumer to being an owner. It's moving from thinking about your next paycheck to thinking about your family's future for the next 100 years. True wealth isn't about the fancy cars or designer clothes. It's about freedom. It's about security. It's about waking up every day and owning your time. It's building a financial foundation so solid that it creates opportunities for your children and their children. This doesn't happen overnight. It starts with one decision, the decision to stop just saving and start owning. If this video helped shift your perspective, please subscribe and turn on notifications. We're dedicated to sharing the real strategies that create financial freedom. Now, let me know in the comments, which of these assets are you going to start with?